Hi, Dave Sievertson, Cincinnati General Insurance Agency, with a few quick tips about life insurance. I've met a fair number of people that don't have their own personal life insurance policy. Their response has always been, I have life insurance through work. So if you're in that category, typically the life insurance you have through work is 1.5 to 2 times your annual salary. That doesn't include bonuses or extra compensation. You may have a different arrangement. I check with your human resource department. But if something were to happen to you on the way home today, 2 times your salary doesn't go very far. Other point is, years ago I had an acquaintance in San Diego. Her husband moved there for a job. It didn't work out. He was waiting to start his new job when he had a heart attack and died. He died without any life insurance, and she was left to raise two young children on her own. So it's a good idea, even if you do have life insurance through work, to own some insurance. Jobs change, our situations change. So if you have children, if you have financial responsibilities, we recommend owning at least some of your own life insurance. You do have life insurance, and if both spouses are working, you want to keep in mind that you want to cover both spouses. So two policies for the people that are working. If one spouse is a stay-at-home homemaker parent, you want to insure that spouse, with the idea being what are the additional expenses that you will incur if something happens to that spouse and you have to hire somebody to, pick up the kids from school, clean the home, run them around to all the different activities. So that's going to add to the cost of child rearing. So you want to have a consideration and have something on the stay-at-home spouse. As a rule of thumb, purchasing life insurance, there's different ways to figure out how much you need. A rough ballpark would be 6.5 to 7.5 times your annual income, and then allow extra expenses for final expense and for college expenses if you have children. You'll see a formula on the website, the Life Formula, LIFE, and I think that's as good a place as any to start with. We mostly sell term insurance. I think if you're looking at life insurance for income replacement, for most people, that makes the most sense because you get the most bang for the buck with a term insurance policy. A level term policy goes for a specified period of time. It's not forever, so it's not permanent insurance. It could be 10 years, 15 years, 20 years, 30-year term, and the premium stays the same over that time frame. Again, the advantage of term is you're only paying for the insurance. There's no savings function, so it makes the premiums more affordable. If you do buy term insurance, there's a couple of features to look out for. The first is you want to have something called convertible term. What convertible term means is that anytime during that policy term, let's say we have a 30-year policy, anytime during that 30 years, I can convert all or some of that face amount, which is also known as the death benefit. So if I have a $100,000 policy, anytime during that 30 years, I can convert, $10,000, $20,000, $30,000, whatever I want, up to $100,000 to a permanent policy. So why would I want to do that? Well, maybe my family was raised, but I got remarried, had another family, so my need for insurance continues. Maybe I have a spouse with a disability, and if I die, then that's going to create a hardship, and they're going to need somebody to come in there. So lots of reasons, but the advantage of that convertible term function is that you don't have to go through medical underwriting. It's just call the insurance company, I want to convert this, and it converts to a permanent policy, and that policy stays with you until you pass. The other feature, and this is a rider. Rider is a way to add something to tweak a policy, is an accelerated death benefit. Now, some companies will include that in their policy free of charge. Others, you may have a small charge for it. But what an accelerated death benefit rider does is it allows you typically to bring in up to 50% of the face amount or death benefit if you're diagnosed with a terminal disease. So certainly, if your health situation is that dire, you're probably not working, you're probably having additional expenses for treatment, for hospice, for all kinds of different reasons. Maybe you just want to take that cruise around the world. This would allow you to bring in half of that death benefit while you're still alive and get something for that. And then finally, some property and casualty companies, your home auto companies, many of them sell life insurance now. Typically, that's not your best bet. Sometimes it is. Some are competitive, but typically many are not. So I would encourage you to shop for your life insurance, not necessarily get it from your home auto company. One, for cost, and then two, there can be underwriting reasons. For instance, we just had a client whose mother passed away of cancer at 54. So most insurance companies are going to ding you for that. You're going to have to pay a higher premium because you're going to get a lower classification. But not all of them do anymore for cancer. I think they all do for heart disease. But so we were able to get that client to save him $800 over what the premium would have been with going with a different company. So you want to be able to shop for your life insurance just like you would for your home and your auto insurance. So just a few quick trips. Of course, it gets much more complicated if you're looking at life insurance for business purposes. There's whole life products now that have a long-term care rider on them. I like that feature. So for more information, feel free to contact us about life insurance. Thank you.